Basically in Bitcoin purgatory. It's a place of lower highs and false hopes and mindless tweets of the Coinbase platform with silly arrows drawn. It's a tough place to be, but unfortunately it's where many crypto investors find themselves of late. Now, Bitcoin has been mostly trading between 10,000 and just above 11,000, and it hasn't been able to break out. Plus, even with today's rally, the cryptocurrency is still down about 45% from the highs it made in December, when it was just a stone's throw away from hitting 20,000. So could this be a sign that Bitcoin fever is fading?
That was some dramatic music,
that was
Brian.
very dramatic.
Did that have you?
No, absolutely
no.
So here's from my perspective, here's what's going on. You've had a lot of fear, a lot of FUD is what the kids call it, fear, uncertainty, and doubt about what's going on with the regulatory environment in Asia. So you've seen Korea crack down on some of the exchanges, or at least start to regulate them. China is effectively
That's great. Not laughing at you, Brian.
No, that's fine. China is effectively done in banning Bitcoin. But the key to remember here is that there's a handoff going from the retail Asian investor to the U.S., European, and Japanese institutional investor. And that money is still coming in. That money has not stopped. So, when we talk about Bitcoin up at 20,000, everybody's all excited, running around how great it is. Those are the times to be a little cautious. Now, when everybody's saying, oh my God, it's over, that's it, Bitcoin's dead for the 175th time, now's the time you start looking at it on the buy side.
What makes you think that this handoff is actually occurring? We can't track flows. We don't really know who's buying.
If you were in my office with the phone and hearing the phone ring off the hook, you would know that the flows have not stopped.
That's just me.
Oh,
yeah,
really?
I just want to know why it's going down every day. I'm just kidding.
You hung up a few times on that.
No, but ultimately, Brian, couldn't this be a very healthy consolidation? The fact that actually we're settling in around a level, and you've had people that could have sold it down a lot further that are hanging in.
Yeah, this is incredibly healthy for the ecosystem, in my view. You shake out the weak hands, you get strong hands in there. This is not the end of Bitcoin. I'm actually really happy this happened, because when it starts going up 10, 20%, and it's up at 20,000, people get excited and they start buying the highs. They don't understand. This is an extremely volatile asset, as we've seen. So I think this, at least, sometimes it's painful, but it shows you it is extremely volatile.
So if the crypto fever is not fading, what are some of the golden rules crypto traders should follow? BK will head over to the platform to break down the essentials of the crypto trader's rulebook.
Yeah, let's do it. Why wouldn't we? So the crypto rules aren't too different than some of the other trading rules, but there really are kind of three big things that you should keep in mind when you're trading crypto. First of all, remember, this is a new technology. Things break. This is the internet in 1995. So you only want to risk 1 to 5% of your investable assets on this. And the reason why I say that is, if this is really going to be the next internet, then you're looking at a 10, 20x from here, and your 1 to 5% of your assets is going to grow exponentially. Let's just say it doesn't work. Let's all hope not. Mrs. BK certainly hopes it doesn't not anymore. But if that's the case, then 5% of your assets are gone and you lost it. So it hurts, but it's not life-changing. So that's number one. Number two, don't sell too soon. So if something's up 20 or 30%, you want to hold on to that. It's what the crypto kids call hodling. HODL. And that comes from a misspelling a long time ago. But the hardest thing I had to learn about this market, trading, going from global macro to this, is once things start moving, once there's momentum, you hold on to this thing, okay? And then the last thing, do not panic when things come down. Understand that you're in an incredibly volatile market. These things can move 20, 30% in a day. This is what, if you sell on the lows, that's what the crypto kids call getting wrecked. R-E-K-T. Don't get wrecked. When you want to puke on your shoes in the morning, you buy. Those are your three rules.
Yeah, great spelling. So let me ask you, when you talk about crypto, how do you differentiate, or do you differentiate between Bitcoin and some of the other cryptocurrencies that you're looking at?
Yeah, I mean, there's a whole myriad of them. Really what I look at is the foundational currencies to start. Bitcoin, Ripple, Stellar being your kind of payment systems, and Bitcoin Cash in there as well. And then your platform, so Ethereum, EOS, a couple of those others that you can build smart contracts on top of. So I separate it into those two, and those are the kind of the core of my portfolio.
Hey, Biggs, so you just mentioned platforms, and you also talk about how this is like Internet 1995. So to me, is it more betting on the platforms? Is it Ethereum, which is like blockchain as a service? Is that where investors, not people who are trading, should be looking?
I think if you want to invest, here's the thing that I say about Ethereum, and it's starting to happen with Bitcoin. There is a smart contract second layer coming called Rootstock RSK, but with Ethereum, there's so many people building on that. There are thousands of the smartest minds around the world, and I don't know what's going to be built, but I do know when you put that many smart people together, somebody builds something incredible. So if you just want to kind of close your eyes and say, how do I get into this space? Ethereum is probably the way to go.
All right. Thanks for that, Beats. Very educational. So I had G's.